Happy Monday, traders. I hope you guys are doing really well today. We're doing this on Monday because yesterday was Easter. Oops, sorry. Let me turn that down on my. I watched the live stream on my phone so that way I can answer any questions that you guys have. But yeah, sorry, we are doing the outlook today because yesterday was Easter. If you celebrated Easter yesterday, happy holidays. But let's just jump right into things, guys. Welcome to my weekly outlook. So this is going to be obviously for Monday through this Friday. Um, just my normal disclaimer, guys. Keep in mind that everything I say on here is just my opinions. Okay, it should not be taken as investment or financial advice. It should just be viewed as educational and informational purposes only. If you guys have any questions while watching the live, even if you're just watching the recording, that's totally fine. You can leave a um, question or a comment if you have one. But let's go ahead. I have four pairs that I'm going to be looking at today. So we're going to be going over Euro USD, USD Swiss franc, pound dollar, and the dollar versus the Japanese yen, dollar yen, okay, or UJ. First and foremost, though, I want to look at the economic calendar as always. So, of course, like I already said, today's Monday. Yesterday, when I normally do this weekly outlook, it was Easter, so there was bank holidays, and it wasn't just the U.S. banks that were closed. Well, obviously, it's Sunday. Obviously, all the other banks are closed because it's Sunday too. I don't know why. I guess that's just showing on here that I guess there was a holiday as well, but banks are generally closed on a Sunday anyways, so not really sure what's going on with that. Um, but anyways, the main thing that I want to cover for this week is just three things, all right? And two of those, well, I guess we could cover four things. So the first thing would be the CPI that we have coming out on Tuesday. This is going to be quarter over quarter consumer price index for the Australian dollar, okay? Now we've seen the Australian dollar trending lower. If you guys, those of you guys that are consistently on these weekly outlooks, and or if you're just one of my students and you follow along with my webinars and my view, and really just basically I just regurgitate what is happening with the Australian dollar and I try to put it in a simple way for you guys to understand. And in short, like I've been saying for literally months now, you just need to know that the Australian dollar is basically in like a contractionary phase, all right, meaning that it's negative. It's in a negative trend this year, um, and we're just seeing just slowing in growth. We can already see that this week, tomorrow, that the CPI that is projected is expected to be much lower in relationship to the previous quarter over quarter reading, which was 0.5%. So I'll tell you right now, this could be a possible opportunity. Simon, what's going on? How's it going, guys? If you're watching live, feel free to say what's up in the chat. But I'll tell you right now, this could give you a trading opportunity. Now, I'm not saying that you trade as soon as the CPI prints. Like, you guys know that I'm not a big fan of trading the news. I actually don't condone news trading at all. But afterwards, this may give you some opportunity. Okay, so within a couple hours after the CPI coming out, so just take note of wherever you are, whatever time that's coming out for wherever you are. That's the first thing. The second and the third thing is that we're gonna have two updates this week from central banks. So we're going to have and it's both of them are on Wednesday. So on Wednesday, we have an interest rate decision from the Bank of Canada for the Canadian dollar, of course. And that really doesn't matter when they're keeping interest rates the same, which that's what they're going to be doing. They're going to be keeping them at what you can see, which is 1.75%. But what is the most important thing to pay attention to when they are not raising interest rates is the rate statement, okay? Because that will usually hint at what direction they're moving towards, or if they're going to keep the interest rates the same. So the rate statement is really key to look at. And you don't have to. I'm not saying now. I do recommend it, especially if you're like really on like maybe the newer side and you're trying to like get into the fundamentals, I would recommend reading the entire rate statement. But if you don't, if you're whatever too lazy to read the rate statement, that's fine. You can just like there's so many websites that will give you just kind of like good updates. So my favorite is Forex Live, and I'll be the first to say, guys, I'm not trying to say I'm like a perfect person. Like I don't read every single rate statement, okay? So I'm not trying to sound like some kind of guy that goes and reads every single thing word for word. Although I wish I did that. I mean, I don't think realistically you need to do that to be profitable. I mean, obviously I'm profitable without having to do that. So yeah, that's that. But yeah, I most of the time I just use Forex Live or a similar website that will give a recap. If it is a very like volatile one, it's around a very volatile situation, then I will end up reading the entire rate statement. I've read a majority of like the rate statements from the FOMC regarding the Federal Reserve, but for the Bank of Canada, when they're just keeping interest rates the same, it's probably just best to read kind of like the cliff notes that are posted on like websites and stuff like that. Okay. And then also the same day from the Bank of Japan on the Japanese yen, same thing that we had for the Canadian dollar. So interest rate decision, and then a statement as well. And this is what I talk about all the time, guys. You'll see that every central bank calls it a different thing, but it's the same thing at the end of the day. So, like the Federal Reserve for the US dollar, we call it the federal funds rate. The Bank of Japan, they call it the policy rate. You can see it here. The Bank of Canada, they call it the overnight rate here. Quite honestly, I think it's really confusing that they all call it different things. I mean, once you know, you know. For beginners, it'd probably be easier if they were all called the same thing. I actually like overnight rate probably the most because that is literally what it is. If you guys don't know what these interest rate decisions are that are changing or staying the same all the time, I mean, if you're planning on getting into Forex, you really should understand interest rate decisions and how they work, or just interest rates in general. But yeah, you should probably know that that's what that actual percentage is the overnight rate that one bank charges another bank to lend money or to borrow money, I guess. That's literally what like the 1.75% is. So that's what the Bank of Canada charges, or and that's where and then so that and the reason why it's good to understand that is because that is how you understand what swap fees are. Okay, so you guys notice, not to diverge too much from today's weekly outlook, but just some education for you guys that might not know. So if you ever are in a trade and you see swap, sometimes you get charged a swap, sometimes you pay a swap. When I was new, I didn't understand swap at all, and I thought it was just like random. I'd see sometimes, oh, okay, cool, I'm getting paid, on this trade, or oh man, like I'm getting charged for taking this trade. I never understood what swap was. So yeah, you have to but once you understand that the swap is literally just one is those two. So if you're trading like the euro versus the US dollar, it's the euro's interest rates versus the US dollar's interest rates, and then that's obviously relative to if you're buying or if you're selling, if you're going to be charged a swap fee, or if you're going to get paid a swap fee, basically paid an interest for holding that trade. That's for a whole nother topic. That's a whole nother lesson. But yeah, that's, if you guys didn't know where swap comes from, that's from the interest rates. And basically, in short, we wouldn't have a Forex market without interest rates. Okay, basically the reason why the Forex market moves, money is moving around, isn't because of us retail traders, it's because of banks moving money around. But banks don't move money around just because they need it either. Banks move money around because they are there to invest as well. So, interest rate decisions plays a role into like the bigger return on investment for the big money, like hedge funds and banks and things like that. Okay, so yeah, not to diverge too much, but that's that. If you really want to go down that rabbit hole, that is Forex. In short, okay, is the interest rate decisions basically. All right, because central banks is what creates the currency. Because we don't trade any currency that's backed by anything. It's all fiat currency that some central bank just says it's worth X amount of money, which is That's why I say it's a rabbit hole, right? Because your dollar is actually not worth anything. It doesn't matter wherever you are. You could be in Mexico right now, you could be in the United States, you could be in Europe, you could be in Australia, you can be in Japan, you can be wherever in the world right now, and your money is completely worthless. The only reason it is worth something is because somebody, which is these central banks, tell you what it's worth. And it's all decided by people, the families at the top of the food chain in the world, and they control everything and all the money. And that is why there's no more gold standard. If you guys are not familiar with the gold standard, it was like back in 1971, President Richard Nixon removed the gold standard um, because basically the US didn't have enough gold reserves to trade with other currencies because every other currency was backed basically by the US dollar, and that was what we called the Bretton Woods system. So, not to dive, I know I'm probably confusing a lot of you guys that probably don't know the history that well, but hopefully that is a little history lesson for you. We went from um, the gold standard to something called the Bretton Woods system, and then the Bretton Woods system didn't work out. It was basically a hybrid of the gold standard, but still backed by the U.S. dollars, which is backed by gold. So it's kind of like this domino effect, and then yeah, like I said, that's when President Richard Nixon was just like, okay, we're just gonna take, the U.S. dollar is just worth this much now, and then that's when gold immediately went to what it's now on, which is called the free market, and the gold actually immediately like shot up, I think to like $100 an ounce or something, or it went up by $100 an ounce, something crazy like that, like overnight as soon as it went up. And maybe there's some of you guys, I mean, I'm sure most of you guys are probably a younger crowd in here, but that really, wasn't too long ago. I mean, that was in 71. So there might be some of you guys that, if you're in your 50s or 60s listening to this, that you probably experienced that transition. Maybe some of most of us were probably too, or most of you were probably too young to remember, or, know anything about it, but that would be cool if you were around for that. Been a part of history, just like we are a part of history now, with going into cryptocurrency, not to diverge even more from today's lesson, but these are just my thoughts inside of my head right now. And so we, we're part of history with cryptocurrency. So how crazy is that, in like 40, 50, 60 years when what I believe is going to happen with, this is just my opinions, of course, but I think a lot of people would agree that, we're going to move to a more digital era, digital age, and that obviously is cryptocurrency. And so, 40, 50, 60 years from now, when we're like, wow, remember when cryptocurrency came around and changed everything, just like, basically like going from gold to gold standard to the fiat. But it is actually a much bigger, going from like from fiat currency to cryptocurrency is a much bigger change than just going from gold, something being backed by gold to not being backed by gold. But anyways, that's for a whole nother topic, guys. Sorry to get all over the place. I hope you guys are learning a little bit, for those of you guys that don't know that type of stuff. But there's some other red folders that I'm not going to, I guess the only other red folder is this core durable goods order on Thursday that I wasn't going to talk about. Oh, and then this one here on Friday. But in the beginning of this, when I said that there was 4 things, okay, the first thing was the CPI for the Australian dollar. The second and the third thing are the interest rate decisions, and most importantly, statements on Wednesday. And then the fourth thing that I was looking at is GDP. Okay, it's not just GDP either; it's advanced GDP. Advanced GDP is the most important. You guys know there's preliminary GDP, there's normal, there's final GDP, and there's advanced GDP. Let me see if it actually says right here. Oh, it does say advanced, preliminary, and final right here. And because it actually even says it right here. Right here. The advanced release is the earliest and thus tends to have the most impact, okay? So, but with that being said, the advanced isn't the final, okay? It can be revised, so it's also a little bit more volatile. So just keep in mind that that is going on Friday. Let's see what we have in the chat. To Denford, you said good day. On USD strength, we look at dollar index. On other currencies like NZD and Swiss franc, is there any index we should check on? So the Denford, there are, I'll answer that in just 1 second, Denford. So guys, that's gonna be it for the weekly outlook. Just make sure you are aware of everything. Again, there's a couple other red folders that I didn't cover, but those are just, the most important to me, okay? So let's get into the charts, and we'll start off by answering your question, Denford. So there are other indexes, okay? So we can go to, uh, so there's other indexes, but there's not another index that is like the dollar index for currencies. Okay, there's other stock indices that you can use. All right, there's the DAX, or also called as like the German 30. There's the S&P 500. There's the Dow Jones. So there's stock indices, but um, for the U.S. dollar, or as far as other indices similar to the dollar index and the U.S. dollar, there aren't any, at least that I know of. That at least not that I use. If somebody watching this, whether you're watching this live or if you're watching the replay, if you do know of another weighted index, weighted currency index like the dollar index. And there might be some like obscure ones, but for me personally, like I have a pretty um, set amount of pairs that I trade. So the dollar index is the most helpful for me. But I don't believe so, to answer your question. Okay. But like I said, guys, at the beginning of this webinar, I wanted to go over 4 pairs. Okay, so we're gonna start off with Euro USD, and here's my outlook on it. I think Euro USD will probably continue moving lower. So I'm going to drop it here onto the 4-hour, and we can see last week. So last Thursday, Euro USD broke a little bit lower. It actually rejected off of the 1300 area, where we corrected towards the beginning of April. And I'm just keeping it simple, guys. I'm expecting a continuation lower. In fact, actually, like right now is probably as far as it's gonna go. At least early this week. The markets are obviously getting a little volatile. This is just the past 15 minutes. We've seen it drop. But somewhere around this weekly pivot point, if you guys want to write this price down, if you're taking notes on something, Euro USD at 112.65 is where the weekly pivot point is at. 112.65, and that's where I would expect. I don't think we'll get past that area. Okay. In fact, probably where we are right now is probably where we're gonna be, like the highest where we're probably gonna be this week. Okay. So obviously this is Monday. Okay. It's not the Sunday weekly outlook. It's the Monday weekly outlook because yesterday was Easter. So there's already been some time. So this has already been this week correcting. So yeah, this is what I think is probably going to happen. This is probably going to be the high of the week. In fact, I'm probably looking at entering. Students also. So as far as like if you guys are a part of my Signal group, um, or if you're just a student of mine on the daily webinars, this is probably the trade that we're looking for this week, is a short on Euro USD. Okay, so really, really short and sweet, guys. Next thing, I think USD Swiss franc will probably continue to move up higher. Oh, also, let me backtrack on Euro USD very quickly. Euro USD will probably most likely go back and take out the yearly lows. Okay, so remember where we are right now, where the weekly pivot point is at 112.65. Obviously, we're right now at 112.51, so we're a little bit below the weekly pivot point. And I think we'll make it probably to these lows this week, at least 112. That's pretty conservative. I think it'll probably easily reach that. That's only 50 pips. I mean, it has, if you said Euro USD has 50 pips, or has 1 week to move 50 pips to the downside, that's pretty easy. We could, in fact, see those 50 pips happen just today, or just tomorrow. So just keep your eyes on Euro USD. I think that's something to capitalize on this week. Okay. Now USD Swiss franc, I'm ultra transparent with you guys. I mean, obviously anybody can go and look at my track record, my MyFX book, and go and see all my trading history. That's anybody can see that. Oops. So you can see that my USD Swiss franc trade from last week hit my stop loss, which I'm okay with that, right? I've had a really good run. I think before that, I think the previous 4 or 5 trades before this past trade were all wins. Most importantly, one of the previous trades before this trade made me 7% on a single trade, or a little bit more than 7% on a single trade. So I was okay with taking the risk on this trade. Ended up hitting my stop loss. That's okay. If you look at my FX book, my track record for the month, I'm still in a little bit of profit, marginally in profit, but still in profit nevertheless. Obviously, things could change. We still have a whole nother week and a half in terms of trading before um, the month ends. So that's still plenty of opportunity. I mean, it could still go downside as well, but I'm always like to be optimistic, and so we'll see how it goes. But yeah, my trade on USD Swiss franc myself from last week did not work out. Obviously, we can see that, but this is why I use good risk management, and this is the beauty of using good risk management, is because let me just paint a picture for you guys. Like I just said, the 5 trades before this trade were winning trades. Now let's imagine if I, like most people, and I'm not saying like you guys or anything. I'm just trying to paint an example of how dangerous not cutting your losses are. Is if I wouldn't have used good risk management and cut my losses, which basically, to put it on the charts, I had my stop loss somewhere around this red line is where my stop loss was, and I sold pretty high. I had a very tight stop loss on this trade last week. I gave this out on last week's Outlook. And I only risked 2%. Now imagine if I would have said to myself, oh, I'm just going to hold this trade. Oh, I'll just move the stop loss a little bit, or it has to drop eventually. It's going to get to the highs. Well, I'd be, in a very, very bad situation right now. Basically the 5 wins that I made before this one trade, I could have wiped out all of those losses. In fact, could have wiped out even more than just those 5 wins. I could have wiped out more than those 5 wins if I wouldn't have used good risk management. So, I can't stress it enough, guys. Even on my own signals, I use good risk management. Just let that sink in. Some people are wanting to over leverage my trades and ideas, and I myself, the person giving out the idea, I am not God, guys. I am not the trading God. Okay, I still take losses. So even myself taking my own trades where I'm confident, I have probably more confident than you taking them because I'm the one calling it. I'm still only risking 2%. Let that, the psychology of trading sink in, because that's truly what it's about. Okay. But I think USD Swiss franc is probably going to continue higher. It's probably going to run. Last week we actually saw it close above the yearly highs, not just 2019 highs, but 2018 highs as well. So check it out. This is the weekly chart on USD Swiss franc, and obviously we can see this weekly candle, but look at last week's weekly candle and look at where the body closed at, and look at where the highs of 2018 are and 2019 are. We're above that. Okay. Now we're not above the highs of 2017. We're almost above the highs of 2017, or getting there. But yeah, this is definitely telling us a story right now that the US dollar overall is pretty strong. We know that Euro USD and USD Swiss franc have a pretty negative correlation. So that's why I think if Euro USD continues to go lower, I think USD Swiss franc will probably continue higher as well. Also, pound dollar, I'm looking for shorts on pound dollar. Okay, so again, let me recap, because there's a lot. I see there, we're kind of like peaking with a lot of you guys on here right now. I am looking for a Euro USD short, a USD Swiss franc buy, and a pound dollar short. Okay, pound dollar is dropping right now. We're breaking some pretty significant support. And we're just really seeing the US dollar take off right now. And so, and you can even see just on like the lower time frames right now, I think it's pretty clear, pretty obvious that price action is moving lower on pound dollar. And like I said, this can happen early on this week. Like I said with Euro USD, like we're already rejecting off of the weekly pivot point, and it's just Monday. We're decently into the week. It's Monday already. We're going already, but I guess what I'm trying to say is I don't think that these moves are going to come Friday. It looks like they're already starting to move. Probably in the next between 24 to 72 hours, we're probably going to start to see all these moves happen between now and Thursday, basically. I don't think that this is going to be an end of the week move. So what that means is for my students and you guys taking my signals, all my signal people, that we're probably going to be taking a trade today or tomorrow. Okay, most likely today. I like this rejection already on Euro USD. I already like what's going on the 4 hour. So, oh wow, it is just taking off already. Holy cow! Just in the past 25 minutes. I mean, that's not much, just 10 pips, but from a couple hours, from it consolidating for a few hours and then it just breaking out like that, that's pretty sharp. Especially, it's Monday right now, Monday afternoon, late afternoon, almost Monday evening for some of you guys. It's not normal for the markets to be this volatile right now, so kind of interesting to see that happen. And then last thing is dollar yen. So I just want you guys to look at this pair, okay? So check it out where it's at. This is the daily chart, believe it or not. This is how consolidative the market has been. And this green box, by the way, is nothing new. This has been here for literally months. But I'm just going to zoom out so you can see how, where it comes from, so where the support and resistance and how relative it is. So pretty much from like the middle of last year, this comes from, and we're sitting on it right now. See, look at this on the 4 hour right now. If that's not a textbook bull flag, I don't know what is, because I mean, yeah, obviously that is a textbook bull flag. So hopefully you guys can see the theme so far. I'm looking at shorting Euro USD, buying USD Swiss franc, shorting pound dollar. I basically already said, I literally did say that this is all in reaction to a stronger US dollar. So most likely this week we're going to see dollar yen move up higher. It's been in consolidation for a while. I wasn't interested in touching this first, but the more it consolidates, and look at the tighter it gets. Look at when it first started consolidating back on. You can see like on April 12th right here, right? It was pretty tight, and then it started to expand a little bit. It got a little volatile on the 16th and the 17th. But look at how it ended last week, and look how it's been this whole week so far. It's just been stuck, like literally no movement. I don't know why my economic calendar disappeared. I think I must have accidentally exited out of it. But if we go to the economic calendar, don't forget that on Wednesday from the Bank of Japan, monetary policy statement and interest rate decision. Okay, so this is probably going to be a catalyst for the markets to move. Now that is still 48 hours away. All right, so that's not happening anytime soon. So the markets may just consolidate until then, but they might not. We might actually see some volatility, especially if the US dollar picks up some movement. Then we will see what happens. But yeah, I think dollar yen could at least move like a nice 100 pips. So there's this descending trend line. So let me extend this a little bit. I know depending on what kind of device you're watching this on, when I scroll out like this, it might be a little bit difficult for you to see, so I apologize. All I can say is upgrade your device. But you can see this descending trend line, and that's probably a good target to expect dollar yen to reach, and that's about 112. 50, 112.60ish, and we're just under 112. So to the upside, that's like 50, 60 pips. All right. So so that's kind of similar, like Euro USD moving down to 112 also, like the 50 pips to the downside. So if we see Euro USD move down to that support where I'm expecting 112, we'll see dollar yen move up to 112.50. Okay. Because we should see an inverse correlation between the two. But guys, that is going to be it for the weekly outlook. Those are the most four interesting pairs, or the four pairs that I'm the most interested in for this week. So I hope you guys can make something out of it. Please, definitely, as always, please use good risk management. I hate seeing blown accounts, guys. I know how enticing it is, when everybody's posting screenshots and things like that of MetaTrader and, having $1,000 days and, all these crazy returns. But, just remind yourself that there's no need to compare yourself, right? Like, somebody that's been trading for 5 or 6 years that's making $2,000 or $3,000 or more off of a single trade, when they're trading a 6-figure account, you shouldn't be comparing yourself, with your, $5,000 or $10,000 account. You just can't expect to get the same results. And if you do, you're going to get burnt. You have to respect the power of compounding. You have to respect the progress. Okay, you have to respect, yeah, I mean, just the journey that it takes to build your account. Okay, you can't come into this. You can't expect to come into this and have easy success. You're definitely going to have your good weeks, your good months, where you're going to come in there and you're going to kill it. Don't let that get you into that bad mindset, though, that every single week is going to be like this killer flip your account type of week. Okay, you're going to have those types of weeks. I'm not saying those flip your account type of weeks, but those really killer 5-10% return on investment trades. Okay, we just had one in our group. Okay, me and my students, we all just had one. We took a short on, I can't remember if it was USD CAD or Euro Yen. I don't remember. It was one of those two pairs. Go check the MyFX book, though. I made 7% on a single trade, but that doesn't happen every single trade, right? I'm comfortable taking a loss, or right after that too, we made like a 2% on another trade as well, or 2.5% on another trade. So basically, in 2 trades, made 9.5, basically 10% in 2 trades. Like, let those ride those win streaks, but make sure you know when to cut your losses. Make sure obviously by using good risk management. Simon says, can we go over oil? Yeah, we can definitely go over oil. Also very quickly, I just remembered, guys, some of you guys had messaged me about Euro USD. I think I already gave my opinion on Euro USD, though, because some of you guys had given me your opinion, because some of you guys told me that you bought the correction. So last week you bought this correction on Euro USD. I messaged a couple of you guys back. I couldn't get back to every single one of you guys, but if you're watching this now, you have my opinion, right? I would definitely take your profits on Euro USD if you haven't already, and look at getting on the other side of your trade, getting in a short on Euro USD. Okay. So Simon, you want to see oil very quickly, and then Mako, you want to see GBP AUD. Sure, we can do that, guys. So oil. If you were on last week's weekly outlook, you know that I went to a neutral outlook. However, I went back to a bullish outlook with my students on the daily webinars last week. And we in fact did see oil go higher. I'd be careful with oil. I mean, it's just so high right now. It's just been pushing. It's gone from basically $40 to $65 without any real correction. It's had some small corrections, but it hasn't had any real correction yet. But I mean, if it does continue to push, then we'll see USD CAD move lower. But take a look. This is the weekly chart on USD CAD. Pretty disgusting, right? Not a whole lot to work with. I feel actually really lucky to have been able to work a little bit with this, because I caught a nice, or not just me, but all of my students, we all caught a very nice short on USD CAD back here on the 28th, and we shorted for, what was that, like 125 pips or something that we made on that trade. So, we've been kind of careful in this range. Some of you guys may recall also, I've had some ideas to short at the top of this range. I haven't had the guts, guys, to actually short at the top of this smaller range that we've been in, I'll admit, but it has worked out nicely. But I think I'm gonna, you notice I don't have USD CAD marked off right now. I'm gonna stay on the sidelines with USD CAD right now, just with how consolidative it is. Okay. And then Mako, you want to see GBP AUD? Yeah, sure. Let me pull up GBP AUD. Now, fair warning, as not just to you, Mako, but just to anybody that gives me a pair that I don't normally trade, that I don't guarantee obviously accuracy on it. I'm just gonna look at it and kind of give my opinion. Holy cow, that must be from the flash crash. Yeah, that's the flash crash. Okay. Wow, what is that candle? How much was that? Oh my gosh. We saw some crazy flash. I mean, obviously there is the flash crash. Like, we know about this flash crash. This isn't a surprise. But what's surprising is the pips. Like, I don't even think pound yen moved that many. That's 2,200 pips. Pound yen only moved like 800 pips. Oh my word. Wow. Like, I mean, we saw some. I mean, everybody knows that day, right? If you were here, right? I mean, AUD USD moved like 250 pips. I specifically remember, guys. I remember I was literally mattress shopping. I just moved into my new place, here in Phoenix, and I was literally walking into a mattress store, and I remember everybody was like, "What the heck just happened?" Everybody was freaking out, and this was the flash crash. I remember that, but pound dollar just Oanda graphs. I don't. Oh, good call, Jay. Okay, Jay says just Oanda graphs. It might not be. Oh, yeah. Is that okay? False alarm there. Just Oanda's graphs. It wasn't actually that flash crash. So that flash crash wasn't actually that big on that day. Then okay, okay. Good call. That's interesting. I was gonna say 2,200 pips. That seems a little much for what it was. You know, I mean, usually like my go-to is like pound yen, which I don't think this is Oanda. I don't think pound. I mean, I saw it on the charts. Pound yen even. Okay, yeah, this is FXCM also. Okay, so yeah, that pound AUD is just Oanda. So in that case, I guess we'll go ahead and look at this on an FXCM chart, just so just so we don't have to look at that, I guess, little glitch or whatever. But it looks like pound GBP AUD is probably going to go higher this week. Makel, so you were the one that was asking about this. Keep in mind that tomorrow we have that quarter over quarter CPI for the Australian dollar, and it's forecasted to come out much worse than the previous quarter. So if that's the case, if weakness on the Australian dollar would send this pair a little bit higher. If you're looking for targets, if you're gonna buy, I'd say like the 50 EMA, it would at least come back up to kiss it, to at least touch that. So that's like 100 pips on GBP AUD. Okay, but yeah, this probably is a little bit of a bottom, especially with the Australian dollar strength, or weakness this week. Okay, that's my opinion. Simon says, and to finish, maybe take a look at gold with a bullish US dollar. How low should gold head to? Okay, yeah, we can definitely look at that. So gold probably will go lower. You know, I do see a missed opportunity. Hindsight is always going to be 2020, guys. I think even the best traders miss opportunities. Let me just put it that way, okay? And last week we can see that there is, on the weekly candle, there is a pretty nice exhaustion candle at these highs on gold. I think some of you guys saw it. I know I didn't even look at this pair last week. I didn't even look at gold last week as an instrument, so I didn't trade gold. But maybe some of you guys caught that downside on gold last week. Gold will probably continue to move lower as Euro USD moves lower, as well as pound dollar moves lower as well. It's consolidating at these lows. We can already see this week, this line right here, it's supposed to be purple, but since there's a green box over it, it just kind of makes it I don't even know if that's a color. It's like a neutral color, but that's the weekly pivot point that we bounced off of last night. And so we're probably going to continue going lower. As far as depth, I think 1250 is easily an area that we could move towards, but probably halfway between there is good. First 1260, so we're at 1274. Take it chunk by chunk, so 1260, then 1250. We know how volatile gold is. We could see it hit 1250 in the next 12 hours if gold really wants to. But 1260 is probably a good target for this week. Okay, Naranj says as yen is dropping. Well, I guess what I not to be not to be the Forex police about it, the correction, but dollar yen would be dropping. So technically the yen is gaining strength right now. So the yen is actually going up. The Japanese yen is going up, but we're seeing like the dollar yen and pound yen go down. But yes, you are right. Holy cow. Look at that. Look at that volatility. Holy cow. And there's nothing. Let's see if there's something going on. Forexlive.com. Barclays on oil sees upside price. Japan, it looks like it's this right here. Japan Economy Minister Motegi trade talks. So it looks like there's some trade talks with the U.S. a little earlier than it had been scheduled. Off to Washington. Oh, no, it just says, no, it didn't start. Okay, it just says he's off to Washington. Yeah, it doesn't look like there's any updates or explanation as to. I mean, that's not any crazy, super crazy volatility. It's only like 8 pips in a couple minutes. But yeah, keep your guys' eyes on dollar yen. Okay, it's definitely going to stay volatile around this area. But I do think overall it's going to make new highs this week. Okay, but I'll say right now, overall, if you guys want my number one pair, and I appreciate your guys' patience. There's a lot of you guys on here right now. If you guys want my number one pair out of all 4 that I talked about here. Euro yen downside. Okay, I think that you can find a good position on it, whether you're a scalper, an intraday trader, or even like a weekly swing trader. You can find a good position for some downside sometime this week on Euro USD. Capitalize on it, but I'm gonna stick with it. I'm gonna stick with it, guys. 112.50. I think we should see lower. We'll obviously let's recap on tomorrow's. So just for the record, I'm expecting Euro USD to move lower, below 12.50 where we're at right now. So let's look at price action. We'll revisit it just like we did with USD Swiss franc. Just like how I'll be just as transparent with the loss. If I'm right, and now I'm not. This isn't an official trade like last week's trade on USD Swiss franc was, because I'm not personally in the market right now, or I'd share it with you guys. But yeah, that's just what I see. The rejection literally happened while I'm on the call with you guys right now, while I'm on this webinar. So I'm not going to just jump into it, especially when the 1 hour candle hasn't even closed yet. So there's still definitely confirmation that needs to happen. But if we do get that confirmation, then you better believe I'll be shorting Euro USD, okay? And that's going to be it for today, guys. That's a wrap. So I appreciate you guys. Please, if you have not already liked this video, guys, please give it a like. If you've made it this far, if you've gotten value, if you are just here consistently, it just really, I appreciate the support, guys. It really goes to show the support when you guys click that like button. It takes like 2 seconds to do. Doesn't cost you anything to do, but it really helps me out a lot and helps other people out. It helps with the YouTube algorithm to get the video out to other people and help other traders as well. So I appreciate you guys for liking the video. But guys, I'll keep you guys updated. Students, I'll see you guys tomorrow I'll see you guys later in Telegram also if we take a trade, and then tomorrow on the daily webinar. And everybody else, I'll see you guys on next week's weekly outlook. So take care, guys. Have a great week.